morning. I'm Larry Steinhouse, and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics behind the biggest moves in the stock market. It is presented with comedic common sense by an expert in financial literacy, and hey, that's me, Larry Steinhouse. Today is Friday, March 6th, and I want to welcome you to the show. We are here live on WWDB Radio, 860 AM in Philadelphia, and we are live on Facebook, Twitter, LinkedIn, and YouTube. All right. You can also find me on Facebook, LinkedIn, Twitter, Truth Social, TikTok, and other social media by searching Larry Steinhouse. Just a reminder, if you're watching online, hit that like button, hit that share button, and don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. You can comment live during the show on YouTube, Facebook, LinkedIn, and Twitter. And please say hi so I know you're watching. And real quick, a couple of people saying hi already. We got Charles and Larry and Jose and Tommy. Thanks so much. I'm really here, Tommy. I don't know why he's asking me if I'm really here, but I'm really here. All right. Again, don't forget to subscribe to the YouTube channel. Don't forget to like the Money Chat Now page on Facebook. And I'm looking forward to today's show. All right, also brought to you, of course, Money Chat Now, one more time, Money Chat Now is brought to you by Investor Schooling, and you can attend a complimentary class this Thursday by going to investorschooling.com, and there you will learn about real estate investing and stock option trading from those who do it every day. Yesterday's class was a lot of fun. If you were there, let me know what you thought. All right, so today we're going to be discussing the futures update. We're going to be talking about fair housing rules. We're going to be talking about OPEC oil, job openings, e-commerce stocks, and the tax credit expansion. All right, let's get into the futures a little bit. Hey, look, I got to tell you something. I'm really glad this jacket's paid for because it's really the only thing I didn't lose yesterday. You know, good thing you can't see that I'm not wearing any pants because I lost those yesterday. Yikes, it was as low as 1,300 points the Dow was down yesterday, that low. That's inconceivable. The NASDAQ was really crushed. You know, it's like the year 2000 all over again. The tech stocks are saying, nah, we're going to take your money away. The NASDAQ was down 6% at one point, 6%. That's a real crash. I said yesterday I expected a pullback, but I just didn't expect that. Well, Biden, I hope you're proud of what you're doing and the future of all those people counting on their 401ks for retirement. You know, I actually thought about this. It might actually be that we got this all wrong. It might be that Biden and the Democrats are super geniuses and figured out a way to fill all those vacant jobs. By crashing the market, and we're going to get into this a little later, but by crashing the market, all those people who walked off their jobs and banked on their retirement plan or their investments in the market now need a supplemental or maybe even a main income again. That must be the plan. Bankrupt Americans into taking jobs. That might be it, right? So that might actually be the problem. They want to get everybody to go back to work by taking all their money away. All right, I was looking at yesterday Etsy stock, ESTY, and it hit a high, I don't know if you guys know, it hit a high of 307.75 in December. That was just 6 months ago, and now it's at 90. 90! Whoa. Look, I understand that the scamdemic play is over for them and the rest of the retailers, but holy cow, 90? Pre-scamdemic, the stock averaged about 60, so it's likely that's going to return to that level before the end of the year. You know, they call this a market correction, and that may be a true definition. However, in this case, the true correction will be the return of stock prices moving back to the range they were before the scamdemic. I would look for them to return to a high of the low in that range. So if they were ranging between 70 and 90, I would say they're going to move down to 70. Why the low? Well, think about it. We are now entering a slowdown and a probable recession. So before the scamdemic, we were hitting reasonable highs. The scamdemic skewed everything, and it made some stocks do some stupid things. In fact, I tell you, that's part of why I had a really bad year last year, because I couldn't figure it out. It made absolutely no sense. Nothing made any sense. But I'm going to tell you something else about what I just said. That's why I still like the travel plays. Yesterday, Carnival Cruise Lines was down below 1650, and remember that pre-scamdemic, it ranged between 45 and 60. Now, that makes me believe it'll return to a future high of 50 maximum, maybe in the next year or so. So to me, 30 or 40 is a reasonable number for a gold price. Like I did with a few weeks ago with American Airlines, I'm loaded up with CCL stock and I'm waiting for the move. I have so much CCL stock, and just so you understand, I have so much CCL stock that for every dollar it goes up, my account goes up about $30,000, and when it goes above 19, my account will move up about 50,000 for each point after that. My goal price is a mere 22. Am I worried? Hell yeah! Stock options are scary sometimes. All right, so eBay along with Etsy were the two biggest losers in the market. And when I see Meta and Apple both drop over 10 points and I see them not come up as the biggest losers, that's scary. So what happened? So as I said yesterday, basically the Fed raised interest rates 2 days ago a half a point, right? So let's examine what didn't happen on Wednesday. The market usually drops on news like that, and then it usually recovers. Well, it never dropped, it only recovered. So now we have the drop, it was just a day late. Like I said, I certainly didn't expect it to go this low, but I hope we took advantage of some of the plays. It may actually be a scary morning today as Wall Street shakes off their losses from yesterday, so watch for that. I expect some sort of dead cat bounce today, but be careful. Earnings season is ending, and there's no market catalyst to drive it up. I told you that I expected the Dow to be below 31,000, but be in the 31,000 range before the end of the month. And think about that, that's only 18 points away. All right, let's take a quick look at the futures and see what is happening right now. Right now we have the Dow is down 157 points. We have the S&P down 25, and we have the NASDAQ down about 111. So it's not even starting out to be a great day. I mean, if it settles here, I'd be okay with it, but we'll talk about that at the end of the show and where I think it's going to go. All right, real quick, lots of people saying hello online. I just want to see if I could say hello to a few of them real quick. We have John and Bill and Lewis and Michael and Robin and Peter. Thanks so much. I think I grabbed everybody, so thanks so much. And Jose, I don't know if I said hello already. Thanks so much, guys. I always appreciate your support. All right, let's talk about fair housing rules. A long time ago, a practice called redlining was prevalent among banks and bankers. So let me explain what redlining is. It's basically the practice in which a bank decided that a certain area, often written with a red pen on a map, was an area that this bank would not make loans to. Simply put, if they felt the area was declining or had a reputation of people in that area that did not pay their loans, they would not lend to that area or the people living in that area. Well, you can easily see how this would be discriminatory. Well, in 1977, the Fair Housing Act was passed and redlining was no longer allowed. Each individual person and each individual home must be underwritten separately. Look, at first, of course, the banks kind of grumbled, but it did create a more fair way of determining the ability of the buyer. Now some crazy liberals, of course, want to make changes to what is called the Community Reinvestment Act, which is the parent document of the fair housing rules. And I got to tell you, I went into this and I wanted to get into this because, I follow housing pretty strongly and I want to know what's going on. But as I read the changes this morning, it reminded me of the CDC and their COVID requirements that no one can understand. The rule for the change in the Community Reinvestment Acts are actually discriminating against banks. It's kind of weird, but let me explain it, right? So I know you don't feel that a bank can be discriminated against, but listen to this. Banks will be separated into three categories. I know, right away, that's discrimination, right? If you're separating them into three categories. They're going to be small, medium, and large. Each category will have its own rules. No, really. If you go to a small neighborhood bank, the rules would be different than if you go to a chain bank. And now I'm trying to see, okay, so what are the rule differences? And I tried to research the difference and how they would be treated differently. And frankly, I couldn't find anything substantial. Most of it was about disclosures and to the government and both to the government and the borrower, right? Nothing about the proposal had any substance. It made me wonder if anyone in the government actually does anything more than just say, hey, I knew a new way we could blame somebody for something. So let's say it's the industry's at fault and let's make up some BS reason for that. And then we make up some BS way to solve it. That really doesn't have anything to do with being monitors and probably won't do anything anyway. Yeah, basically it's nothing. It's like screaming to Elon Musk, if you gave up 10% of your income, you would solve world hunger. It fires up the dumb people, and then when Elon Musk says, hey, show me how you would do it, I'll give it to you, the people who said it retreat into their corner. Anyway, expect nothing from this proposal, even if it becomes a bill. I've always felt that the best way to avoid discrimination is with common sense. However, as we know, common sense isn't so common anymore. Ugh, unbelievable. All right, let's talk about more uncommon sense, OPEC and oil. Oh, please, Mr. Terrorist. Please, Mr. Terrorist, give us more oil. Give us more oil. Please, Mr. Terrorist. This is what I imagine it sounds like when Biden is on the phone with anybody from OPEC. While he begs the leaders of OPEC, mostly terrorist organizations, who are ordering new Ferraris from Amazon at a prime delivery the next day. Think about this. Can you imagine the sheik, right? His secretary says, President Biden's on the phone, and the sheik says, awesome, I need a blue Ferrari. It's the only color I don't have for my collection. As he picks up the phone, laughs, and says, good morning, Mr. President. OPEC agreed, just so you know, they agreed to rubber stamp another small production increase for June amid persistent concerns over weaker Chinese demand and shortly after the world's largest trading bloc outlined proposals for new sanctions against Russian crude. Ugh. A small increase? Really? Not a large increase? Just a small increase? They're actually concerned, OPEC is actually concerned that if they increase the oil production too much, the prices will fall. Didn't I say that these guys were terrorists? Ugh. Well, while the rest of the world is dealing with inflation issues, these guys are learning how to bench press gold and silver. This problem has all been caused by Biden ending our self-reliance on oil. Add that to telling Russia that we're punishing them by not buying oil from them, and they are the third largest supplier of oil. We have a conundrum. We are at the mercy of terrorists. Well, gas prices are now over $4.50 a gallon, interest rates are rising, and inflation hasn't stopped yet. I think we haven't seen the last of this problem. Honestly, I know a great solution to this problem, though. Can we release a document about how the Supreme Court... All right, let me do this one more time. I know a great solution to this problem. Can we release a document about how the Supreme Court feels that abortion issues should not be decided at a federal level? Oh, wait, they tried that yesterday. All right, let's take a quick break, and we'll be back in a couple of minutes.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
All right. Welcome back to Investor Schooling. Hey, listen, if you want more information on Investor Schooling, you can go to investorschooling.com or just give us a call. 855, I don't remember our number. It doesn't matter. All right. Let's talk about job openings real quick. So in March, we had a new high mark of job openings in the country. Unemployment openings exceeded the level of available workers by 5.6 million. There are 5.6 million more jobs than there are workers. It appears that people are still quitting their jobs. Look, I gotta tell you, I'm not sure why this continues, but I do know that it will reverse quickly as the economy starts to go in the other direction. Many people, all right, where are we? Many people said that over the past few years when the Trump economy kicked into action, and basically they did so well, and then now that it was interrupted by the scamdemic infused so much money into the economy, it kept the economy driving upwards, and many people think this is the way it will always be. Free money, easy money made in Bitcoin, stocks, and everyone is an entrepreneur. As someone who trains entrepreneurs and teaches both basics and advanced techniques of making money, I noticed a shift in the way people have been lately. Everyone thinks they're going to retire a millionaire next week because of some, Bitcoin investment, right? Well, it's not just reality. This is just not reality. The plan is just like buying a lottery ticket each week and thinking that that's your retirement solution. Well, the money was made, and many have false expectations of the money they will make in the future. On the jobs front, the level of job postings hit 11.55 million for the month, and that was a fresh record for data that goes back to December 2000, according to the Job Opening Labor Turnover Survey. That's up 205,000 open jobs from February and a representative of jobs market that is still historically tight. all at the same time, quits, more people quit. The quits total 4.54 million, which was an increase of 152,000 from the previous month in the so-called Great Resignation. The COVID pandemic era has seen opportunities for workers who feel confident enough to leave their current situation for better employment elsewhere or just stay home. I gotta tell you, I predict in about a year all of this will be reversing, but the guy who stays home with the concept of never having to work again will be the same guy complaining that there are no jobs. The jobs report, by the way, is expected today, and that may be the only thing that could possibly help the market recover from yesterday. The report is expected to show more people being hired once again, and that brings me to another point. Look, if you guys don't hit that share button, if you don't hit that like button, I might have to go find another job myself. So come on, hit that like button, hit that share button, so I don't have to go to work and I can do this show for you every day. What do you think? I make any money doing this show? Are you kidding me? That's ridiculous. So, hey, hit that like button, hit that share button, and of course, if you're listening on WWDB Radio 860 AM in Philadelphia, don't forget to set a preset to this station and listen every day. And when you get back home, let me know what you think of the show. All right, so real quick, I'm going to jump on the futures update and take a look at that real quick. We've got the Dow. The Dow is down 121. We've got the S&P down 19, and we got the NASDAQ down 80. This is like a more normal day. Some of those days are rough. All right, coming up, we've got a couple more things to talk about. We've got e-commerce stocks, tax credit expansion, and of course, we have today's picks and plays. But did you guys hit that like button? Come on, hit that share button so I can keep doing this. And I want to say hello to just a couple of people who've joined us. It looks like Robin and Jamie and Rob have all joined us. Thank you so much. I appreciate it. All right. Hey, look, by the way, we all know a new financial situation is coming. Is it going to be a recession or a simple downturn? Well, if you want to survive through it, you should order my new book. Go to barnesandnoble.com, look up Money Hacks by Larry Steinhouse, pre-order it. I'm telling you, you're going to learn something. And there are chapters in this book about how to make more money and chapters about how to pay less taxes. So far this year, I made about $100,000, and I will never have to pay taxes on that money. And I mean never. Learn from me as I teach you how to do that and open up this book, Money Hacks. All right, let's talk about what's going on next. Let's talk about the e-commerce stocks and what's happening there. Well, as expected, now that the scamdemic is over, people have started returning to the real world and are shopping in brick-and-mortar stores once again. I actually went to the mall. I found people there. I was surprised. This is causing online retailers to slow up on business. We heard earnings for Amazon and Etsy this week, and both of these companies show significant drops in business revenue and profit. We have seen many online I'm having trouble with that word. Retailers like Peloton or Warby Parker drop to their 52-week lows. In a report issued Thursday morning, MasterCard said total retail sales in the United States, excluding sales of autos, grew 7.2% from the prior year. Within that, e-commerce transactions dropped 1.8%, while in-store sales rose 10%. That's a big change. We're going to see some of the final reports for the last group of online retailers next week. They're all reporting their earnings. Peloton, Poshmark, ThredUp, and Allbirds will be reporting earnings as the season ends. Look, I've suggested that Peloton will be in the single digits shortly, and then probably a company like Amazon, Meta, or Google will buy them. Now, I did notice a footnote of an article saying that Peloton is looking for suitors to buy about 20% of the company. I got to tell you, I think they're below the expectations they really need. They need to sell the whole company, take a fat check, and move on. Those fancy clothes hangers, called those bikes, I mean exercise bikes, right, are not all that attractive now that gyms have completely reopened and people are back to their lives. Hey, maybe I'll see you in the mall tomorrow hanging out. Let's talk about the tax child credit and what's going on with that. Do you guys remember getting $300 a month per child as an incentive to vote Democrat last year? I mean as a bribe to vote? No, I'm sorry. I mean a handout to make you want to vote Democrat? No. I mean, help during the coronavirus scamdemic. This $300 check from the government was an advance on a tax credit that used to be $2,000 and it was raised to $3,000 per child. In the past, when you filed your taxes, you got a credit for $2,000 and paid slightly less tax bill. Makes sense. Last year, they advanced the tax credit to families by sending them checks. So instead of writing it off on your taxes, you actually got a check. This, of course, was very lucrative for families, and soon the government realized that it was unsustainable. Well, Democrats, like the socialist Bernie Sanders, want to reinstate this tax credit plan. I'm sure it's going to be a talking point in the upcoming midterm elections. I really think that politicians should be able to openly offer money for votes. Why do you want to hide it in the form of a tax credit? Just say, listen, vote for me. Just show proof that you voted for me, and I'll send you $100. Show proof you voted for me, and I'll send you $200. Why hide it in the form of tax credit? It's transparent anyway. It's pretty obvious that that's what they're doing. So why do they do it? I don't know. I think they're all silly. All right, let's take a quick break, and I will see you guys in a minute, and I'll tell you what my picks and plays are. Hi, I'm Larry Steinhouse, and I've written a book called Money Hacks. The subtitle to this book is Because Everything You Think You Know About Money is Wrong, and I promise you there are things you think about money that are wrong. There are chapters in this book that I think you will find absolutely fascinating, and some of them are, what is money anyway? Can money buy happiness? I'll bet you don't know the answer to that question. The truth about credit scores, how you can actually use credit cards to rebuild your credit. I also have chapters on being your own bank, how to buy houses with an IRA, and how to invest with other people's money. There are so many other chapters. There are 22 total chapters in this book, and I promise you're going to learn how to make more money and pay less taxes when you buy this book. My name is Larry Steinhouse. The name of the book is Money Hacks. You can get this book wherever fine books are sold, and you can go to barnesandnoble.com right now and pre-order it. I hope that you will enjoy it. To Money Chat Now. I'm your host, Larry Steinhouse. And by the way, we're having a book launch, or I'm having a book launch, I guess, whatever, on June 1st. I'd love to have you there. Go to moneyhacksbook.com, moneyhacksbook.com to register now for $27. I'm even going to feed you. And by the way, the jacket that I'm going to be wearing at the event is even going to be cooler than the book color. The book itself is going to be the same color, so make sure you go there. All right, so far let's talk about the futures update real quick. Let's take a quick look. We got the Dow down 134, we've got the S&P down 20, and we have the NASDAQ down 83. We talked about the fair housing rules changing or not changing, or I don't know, somebody making some fluff piece, who knows. We talked about the terrorists and how Biden has to call the terrorists in order to get more oil. We talked about job openings and people are still quitting their job, which I don't get, but it's going to change real quick. We talked about e-commerce stocks dropping, and we talked about the tax credit expansion. Of course, coming up, we have today's picks and plays. But did you guys hit that like button? Did you hit that share button? Come on, don't make me get a job. Hit that share button. Let everyone know what great stock plays are coming by sharing the information. You can share in your page or in groups that you feel will benefit from great stock plays. And of course, you can leave comments on Facebook, LinkedIn, Twitter, or YouTube. All right, if you're listening on WWDB Radio, please set one of your presets to this channel and listen every day at 7:30 for all you need to know about the politics behind the stock market. All right, let's talk about what's going to happen today and what's going to happen over, I don't know, the next couple of days. So yesterday, I ended the show with my prediction that we would have a big drop after a big pop. As I said earlier, I certainly didn't expect it to be as big as it was. I thought minus 300, minus 500 would be bad, but minus 1,200, whoa. All right, today's a little quiet, but remember that the market tends to work on emotion. So that means that the money managers are going to be scared to make any moves today, and that'll be the general condition of the market. We may see a sell-off in the morning, but it should recover to a neutral sort of day with an average upward down of probably less than 100 points. So the market should end today somewhere near plus 100 or somewhere near minus 100. Nothing exciting. But next week is going to be when the action will be. Now listen carefully, because I know you guys like to listen to my advice. Listen carefully. Next week is going to be a continued sell-off. But I'm going to tell you to expect one of those days, maybe Monday, to be a really big day to suck in all the investors. Write down this prediction, because that will be the state of the market. I will tell you that I'm still a buyer of travel stocks, and I still believe they will reset back to their 2019 pre-scamdemic levels or somewhere near there. Royal Caribbean is currently priced at 2/3 of their former high, and Carnival Cruise is about 1/3 of their former high. The airlines are also lower, however, they've been settling in a higher range. I see American Airlines going into the 20s shortly, maybe 22 or 23, and the next 3 weeks are going to be brutal. However, there isn't much to drive up stocks because of that. So the money managers are basically going to move their money to stocks that are going to be paying dividends and that are relatively safe. I will tell you that I haven't made that move fully yet, but I did find that I'm selling covered calls more often than I was before, and that has increased dramatically during this year. So covered calls, by the way, are the safest way to invest in stock options. I've been making about $4,500 a week selling my covered calls. This is pure profit. Even when the stock goes down, I keep my profit. All right, let's take a quick final look at the futures, and we're going to see that the Dow is down 129, the S&P is down about 18, and the Nasdaq is down about 17. About 72. And like I said, we'll see where that goes. All right, let's talk a little bit about crypto real quick. So crypto tanked yesterday with the rest of the market. Bitcoin was down below 36,000. And I'm going to tell you, this is the new norm for crypto. The real problem will be when the companies who took their excess cash decided that they're done with this investment and finally pull out. So there's a bunch of companies in November and December that decided they had all this excess cash, bought Bitcoin at 60, and hoped it would go to 100. It ain't going to happen, and now they're going to start to get nervous, and they're going to start to pull out their money. We talked about that yesterday with Uber. All right, gold and silver didn't do much yesterday, and again, this is a weird thing too. This is an anomaly to me. I'm expecting that to go up, but wait, because it's going to happen, and it will definitely happen. And by the way, of course, my buy was triggered for silver, so most likely silver is going to go up just today because I'm going to buy it today. All right, Treasury bonds. The new normal for Treasury bonds will be over 3%, and it topped that yesterday. I don't see this going below, in the twos anymore. I think it's just going to be where it is. Oil is back over $110 a barrel. That's not good. I don't know if you've noticed gas prices. Gas prices are like $4.50, $4.60 now. Yike. That's rough. Hey, I want to thank all the listeners on WWDB Radio 860 AM in Philadelphia. I want to thank you for your continued support. And if you're enjoying the show, please reach out and let us know. My name is Larry Steinhouse. I am the host of Money Chat Now, and I am the CEO of Investor Schooling. And I just want to let you guys know that from time to time, I own some of the assets and some of the options discussed in the show, and the opinions discussed in the show is solely mine, and no one has asked me to make them. Hey, listen, are you guys doing anything good this weekend? Let me know if you're doing anything good this weekend. It's supposed to be a nice weekend, and I'm excited about it. It's Mother's Day, and my mother is still in Florida, so I'm not even going to see her. But have a great Mother's Day, have a great weekend, and make it a profitable day.